The Genius Act creates a regulatory structure for the issuance of stablecoins, a form of crypto pegged to the dollar, and it was just signed into law in July. And I think you and I talked about it shortly thereafter.
Yep, absolutely.
You know, like we've discussed the idea that David Sachs is out there like talking, this is dollarization, this is fantastic. But we're talking about now tension between a more modern industry and traditional finance. How, for your association, is that tension being debated?
Well, we're coming out pretty strongly against some of the proposals that the traditional banks have in front of Congress now. They'd like to roll back a lot of what the Genius Act does. They have claimed that they want to close some loopholes that truly are not loopholes. They were at the table when we negotiated this bill. So any concerns that they have now are kind of, late to the game concern. At the end of the day, stablecoins have the opportunity to change how we move money in the globe, and we want to make sure that the regulations are such that we can continue to see that innovation thrive and grow.
If you can't beat them, join them is the saying. So is the idea that I've heard of just bank after bank considering launching their own stablecoins. Why then fight the Genius Act, which would allow them to do that?
Yeah, I mean, I believe they will start to issue their own stablecoins. This is a competition question. Right now, a lot of the exchanges are able to offer a reward around 4% for stablecoins. Your traditional savings account is offering less than 1%, and they don't want to compete. So the idea is let's try to stop the competition and really kind of create a regulatory moat around traditional finance and let them get out ahead. The stablecoin issuers are already ahead of the banks, and I think that's probably the biggest concern they have right now.
You're sending a letter to Congress, you're arguing against some of these actions taken by the big banks. But ultimately, when you're looking at the broader context of Tether out there raising funds, $15 to $20 billion, maybe giving it a valuation of $500 billion, do you think those sorts of numbers are reasonable as to the market opportunity right now?
Yeah, absolutely. When you think about how money moves in the world, it's slow, it's inefficient, there's a lot of friction. Stablecoins take that out of the system. It's an opportunity to, again, move money quickly and efficiently, and it's something that I think the financial services sector has been waiting for. So I'm not surprised by the valuations we're seeing for these companies. I think there's just a lot of opportunity in the stablecoin sector going forward.
Real quick, as a point of clarification, Tether Holdings is a member of your association, somebody that you are supporting?
Tether, no, they're not a member. Okay. They just, we were just at their launch for Tether US. Certainly somebody that we would love to see in our membership circle is in our membership, so we do have stablecoin issuers in our membership.
The reason I ask, I want to go back to the Genius Act point, which is that the banks want one thing and your association, its members, want something different. You basically don't agree. That being said, what is it that the banks are wrong about? Just distill that, please. Yeah,
so they're calling this loophole where the exchanges are able to offer a reward for people putting money in stable coins. This is no different than a reward you would get if you're using a bank credit card.
Right.
They are claiming that that is a loophole around the yield prohibition in the bill. This is not a yield offer. This is a separate reward offered by the exchanges. This is not the stablecoin issuers offering yield. Again, it's the exchanges offering a reward. It's very different. It is not a loophole. And again, if the banks want to compete, they're welcome to do so by offering similar rewards or similar interest rates on savings accounts.
What's interesting is Tether, of course, makes its money by allocating the money it holds and the US Treasuries it holds, and farming yield from those. All of this is about regulation.
Yes.
You come from the CFTC. At the moment, the CFTC has one person in it. We've yet to see a new leader installed. Is there an anxiety? Is the anxiety that some have about a void of regulatory overseeing of this very nascent industry group, is that right or wrong in your perspective right now?
I think there's some concern that there's not permanent leadership at the CFTC. That probably, you see that play out more with potential market structure legislation that the Capitol Hill is working on. But at the end of the day, you see very strong leadership coming out of both the SEC and the CFTC. They're holding a roundtable together today. So it's certainly, even though there's only one person at the CFTC, that's not stopping the agency from moving ahead, doing what is necessary to ensure that they are allowing innovation to thrive. So I think the concern, while it probably is something to think about with market structure, because they do need long-term leadership at the CFTC. Right now, the CFTC and the SEC is doing everything they need to be doing to make sure that innovation is going to thrive in the U.S.